Welcome, everybody, to another episode of the AgView Pitch, heading into a new marketing week, October 21st through the 25th. Amazingly, we are already two-thirds of the way through October, and today we have with us Jarod Creed. Jarod, how's it going?
It's going really well, Chris. And maybe I need to give you the reminder for Alyssa today. Are you supposed to put a little plug in there for some conference
Oh,
coming
yeah.
up?
Oh, yeah, I probably should. Thank you for reminding me of that. Yeah, our AgView Executive Business Conference, January 22nd through the 25th. I've said this enough, I guess, on the last few that I can actually remember the dates now. In January, guaranteed better weather in Florida than any place else in the U.S. probably at that time. We have great educators. Jarod, you're one of them. That's going to be there. We're going to have a arm wrestling match with you and Pete Meyer and Joe Vaklovic, and that'll be interesting. We got a lot of really good educational opportunities there. So if you're not signed up yet, please go to the AgView Solutions website and get signed up because their spaces are becoming more and more limited. Um, we still do have some slots open though, so if you're planning on going, please get signed up. With that said, Jarod, what are you hearing for harvest so far as we're two-thirds of the way through October now?
Well, the constant theme it really doesn't matter where you're at. First time experience for me and first time experience for individuals who have been in the ag industry for decades. It certainly feels like we're going to try to harvest, 100, 120 million acres of corn and soybeans combined, nonstop from start to finish without any type of breaks. That's probably been the biggest storyline here in the last couple of weeks. The U.S. infrastructure is not designed, not built to handle so much volume come at it all at once without ever having any breaks. And quite honestly, starting everywhere pretty much at the same time once you pretty much get north of I-70. That's been the resounding theme. Obviously, lots of dry corn, lots of dry beans, a lot of debating around if that's going to really have an impact on national yield. Oh, yeah, maybe I'll give you a little bit that it could impact it somewhat. But when we actually figure that out, it's probably a good year away from now, and it really does not matter.
Mm-hmm.
With a very, very fast harvest, it's making it maybe it's making this basis situation probably throw some false signals to a lot of producers across the U.S. that you have very, very wide basis levels in pretty much, I would say, the majority of the U.S. Corn Belt at the moment. I get it. There's places that are not in that camp. But in the next couple of weeks, we should have like a rubber band reaction. We should see basis values see a pretty stern pop higher once we kind of get past that, call it 80, 85% harvest mark. Once it becomes a little bit easier for the crop that's coming out of the field to be put away, and just give the system a break for a second. And at this point, still the grain market as a whole doesn't really have the ownership from the farmer that they'd probably like to have, and that's going to have to change through the balance of the year. I think we're already seeing a few signals like that in a few places where basis has started to move. But I think that's been a story, Chris. Yields are kind of as advertised, pretty good beans, pretty good corn. We don't have a lot of people necessarily knocking off records, but it's a far cry from any type of a story that it's not very good. Basis value is low, and everybody just focused on trying to put this thing away as it seems like, moisture of this crop is just dropping on the daily.
Mm-hmm. Yeah, it's a quick, like you said, to put it very simply, it's a really fast harvest. And I think, the last week or so, I mean, I would still say we're maybe 5, 10 days away yet from really having some issues in some areas where, people start looking at each other and like, okay, what do we do with this now? Where do we go with this last 300 acres or whatever? It just seems to me like basis still could get even a little worse. What's your thought on that? I
Yeah,
mean, I
there's going to
agree
be
with you.
areas that's going to happen, but I think there's
Yeah.
probably areas that they're still weak on basis values, but they've
Yeah.
already recovered off the lows.
Right. Yep. Um, we'll keep this one short and sweet 'cause I know guys are busy but I want to ask you, what's your thoughts, for those bushels that are still, yet unpriced and maybe those last few or, you know, people are going to need cash flow towards the end of the year and stuff, do we hold on a little bit here yet? Let basis improve, like you said, and any hope on the flat price type side of things, or anything that you're looking at there that might create some
So I think
opportunity?
there's kind of like three answers there. Let's start with the flat price. The market just really doesn't have a story right now. Once we got past last month's WASD and especially the quarterly stocks report prior to that, it pretty much was a view of the future that it's going to get pretty quiet here. Now you can make the argument that, yeah, you've got corn trading in a 15-30 cent range. You got beans trading in a, 60 to 75 cent range. The beans a little bit more violent than anything else, but we actually finally put some moisture in South America. But outside of that, there's just really not a lot of news. And I don't think that there's going to be any type of fundamental changes that we need to be thinking about on the radar anytime soon from a USDA. That's really not going to be any changes until January. They're going to matter. Um, we got the election looming. That can definitely spur some excitement across multiple different commodity classes and markets. Maybe that can be a little bit of a lightning rod to the grain market, but I don't mean just higher. I mean that can be both higher or lower. Not going down this political path here, but in my personal opinion, one man's opinion here, to nobody get their feathers fluffed here, that
Send your hate
if
mail, Jarod.
if you're voting for your wallet versus the possibility of what you think is voting for what you think is right, there's a possibility that the U.S. farmer is voting in two different ways. Is right versus voting for your wallet, and that's how I would kind of sum up U.S. agriculture at this point from a political perspective. It's not all blue. It's not all red. There is still, and there's going to be folks who are going to lean one way for multiple reasons. There's going to be folks who are leaning the other way for various reasons. At the end of the day, my point being is that we still have to be mindful of a return to office by President Trump, the possibilities, negative ramifications that they could still have on the ag sector. So that's maybe something that scares me a little bit for the decisions that people need to make here in the near coming weeks. Yes, basis still should continue to get a little bit better, but here's probably the most important thing here. This is where you got to say, oh, it's not advice, it's an idea. Option volatility is so darn cheap across all these markets that it's basically screaming to the farmer, sell your grain, buy some calls, turn it into cash, get it shipped, and move on. That basis could still get a little bit better, but option volatility, I just like to explain it to folks. Price insurance, that's what options are. Price insurance. Think about price insurance uh, on your property insurance today, Chris. It's so high, right?
Mm-hmm.
Input costs to rebuild structures are high. Mother nature volatility is high. Well, the exact opposite is what's happening in the ag sector today. There is no volatility. So it's very, very cheap, for lack of better words. There are opportunities to go out to March, May, July in both corn and soybeans and just own your upside potential if you so desire it on any bushels that you really do need to be selling right now, whether you don't have space for it or you need cash, what have you. I would almost err on the side that most sales, anything made here in a short while, probably really should consider some type of an option strategy out there into next summer.
Mm-hmm. Interesting. Yeah, I think I like the idea of turning the grain into cash too, just because you don't have to do a lot of algebra, but when you look at interest rates, you look at prepayments and some of the things that that we're going to need to do for the 25 crop in terms of trying to minimize our expenses, prepaying some things, doing some shopping, being disciplined on the cost of production side of things. I think there's some ways to navigate that, but it always helps to have cash on hand to do that. So,
Yep, sure.
um, anything like I said, we want to keep this one kind of short, but is there anything that you're watching in say the next couple of weeks that guys need to be paying attention to that we didn't mention? We talked about obviously the election and and managing basis and paying attention to flat price and options are cheap. Anything else that you got?
No, I think that basically covers it right there. I think there's just in this next 2 to 4 week stretch, there's going to be these little basis pops, and guys are going to need to be cleaning up bushels and making some sales and
Mm-hmm.
stepping into some minimum price type of contracts via options. That you nailed it on the head. Short and sweet. Really nothing to talk about.
Yeah. One
I
one
mean, South
last.
America's starting to plant.
Yeah.
Yeah, you're still a little dry over in Ukraine, but what's new to report on the Israel and Iran front and Ukraine and Russia front? U.S. production is going to be solid. You've got the traditional harvest pressure. Um, there's just it's kind of getting into the doldrums of the winter pretty quick here.
Mm-hmm. Yeah. One last question. On corn specifically, and you could answer this on beans, and I don't need an exact number, but if guys are putting targets out there for, for like that December timeframe, I mean, like in our area, it's like around Christmas, between Christmas and New Year's, it usually is a really good basis because everybody wants to park their trucks. Is there a flat price target you would be looking at range? You don't have to give me exact number, but like a range on that March corn that makes you feel warm and fuzzy or not really, or what's your thought there?
Warm and fuzzy, definitely anything back above 450 again. We were just at what 452, 453 here a couple weeks ago. You get March corn back above 450. I think that is most definitely a place where producers probably need to be letting go of stuff.
Mm-hmm.
But I'll tell you right now that range could easily be wider than 4 to 450, with maybe a little bit of a bias that low end of the range is probably lower than 4, with that top end being closer to 450.
Mm-hmm. Okay, I lied.
So
One last. Yep, good,
on the
good.
bean side, it's probably somewhat similar to where we just were as well. Now we probably ought to look at January futures, not necessarily March,
Yep.
but give or take that $11 area. It saw South American activity, it saw U.S. farmer activity, a little bit firmer a basis. I would say that on national cash average, $11 March board buying beans greater than 1050, with the possibility of 11. And we don't need to buy a crop all at one time. It's just going to be a matter of who's kind of first to get their fill
Mm.
before maybe some of that buying subsides again.
Right. Awesome. Well,
So you had one last question.
yeah, well, a last question, and you can do this one quick. When those opportunities are there on the old crop now, the 24 crop, should we be pulling the trigger on a little bit of 25 crop? That's my last question. I promise.
Yeah, I mean it's still almost every decision that could have been made in the last 6 to 9 months on next year's stuff, 2025 production, to this point has obviously turned out right. I mean, selling some $5 corn, selling some 475, selling 450 just recently. Yeah, all of that has kind of worked out. Uh, I'm just nervous that our costs are just not changing in the next year, and still seeing some that costs are going to actually be a little bit up. So it
Mhm.
just
In
turns
some
into that
areas.
defensive mindset, turning this year into cash, not paying exuberant interest for no reason. Try to stay fluid, and all at the same time, just kind of how do you define success for next year? I'm willing to define success for next year of break it even. And
Hmm.
when I talk about break, that means I'm retaining working capital and building some equity.
Yeah, and paying yourself. Right.
Correct. Yep.
Yep. Awesome. Hey, this has been a great conversation as usual. We get this harvest wrapped up here in the next couple of weeks. We'll get you back and we'll start figuring out what we need to be doing to wrap up 24 and get setting up for some success in 25. And thanks for reminding me about the reminding people on the executive business conference in January. If people are not signed up, get signed up. It's going to be a great conference. I guarantee it'll be the best one you've ever been to. They get better every year. So thanks, Jarod.
Oh, thank you, Chris.
All right, everybody, please be safe out there. We haven't had any rain days, so take one, make one. We're going to make one on Sunday, and if you have to make one, just take a day and park stuff if you have to. Everybody, get your rest, be safe, get things wrapped up, and we'll be in touch again. We'll catch you again next time on the Ag View Pitch.